What's up, guys? My name is Jack, and welcome to Invest Today. Today is a huge topic because I'm going to begin to reveal all my accounts for you guys. I didn't want to do this right in the beginning, and I wanted to build this channel a little bit, but I feel like now I want to start going into slowly kind of all the positions that I'm holding. In future videos, I'm going to go into showing you exactly what I'm buying and selling everything for, but now I want to open up my two major accounts. I want to show you guys exactly the positions that those accounts are holding, and I'll kind of go into more detail, percentage of allocation on different stock positions, and if there's any bonds or what's up. So let's jump right into it, guys.
Take a look. I'm currently holding 6 positions, and these are varied in terms of percent allocation of my account, but I'll give you guys kind of the breakdown. So the first one in my biggest position is Toll Brothers. Toll Brothers is a home building stock, which I believe is severely undervalued. It's trading around like a 6 PE, 6.5 maybe, and I believe with the kind of the bull economy that we have going on right now, and even though it's older. I believe that home prices and Toll, they have a serious ability to expand in the future, and that stock is just completely undervalued. The more you learn about kind of my investing style and the positions I'm holding, I'm more of a value investor. I like to have a good mix, with some growth stocks in there as well, but I typically like to hedge more on value, and so looking, PE being a major indicator of when for me to buy and sell a stock. Toll's PE with their management team and kind of they're the best in the breed of the home builders. So even if we were to hit some sort of significant economic recession, the average Toll Brothers home price sells for around like $850,000. So someone that can afford that type of house, and over 25% of those houses are paid for in pure cash, so no mortgage at all, so you don't even have to go through the bank for a quarter of those homes. So a company like that is the best of breed because they're not really going to be affected. The person that's buying a Toll Brothers house really isn't worried about any economic downturn. Jumping right into the next one, sticking with the banking is Goldman Sachs. Again, another best in breed company, a company that is so low right now. Again, the PE ratio on that company is ridiculously low. Now, this is the first time that we're kind of in a rising interest rate environment, and it's these bank stocks are going to profit huge. Any market volatility, Goldman is expanding their trading platforms as well. So any market volatility is only better for Goldman. And that's actually my second biggest position. My third biggest position right now, guys, is Boeing. Boeing as a company, they are booked well into the like 2025, 2026, no problem. And that's truly a company that is best of breed. It pays a good dividend as well as Goldman Sachs does, the second biggest position that I currently own. And Boeing is a company I'm very bullish on. The Street, Jim Cramer's company, has a rating, has a sell rating on $434, I believe, that on Boeing, and it's trading just at so pretty much $100 below what they recommend, kind of selling it at, or price target. So it's honestly so cheap, and it's a stock that I really believe in for the long term. I plan on holding Goldman and Boeing for well over the next year. And Toll Brothers, I have a price target up on Toll right around $48 or something, around those. So now jumping into the next one, FedEx. FedEx is another company I plan on holding for multiple years. Again, it's a company that the stock has been beaten down. And here, according to Jim Cramer, we try to buy broken stocks, not broken companies. And I believe FedEx was a broken stock for a long time. It traded all the way down to the $220 range, and it has since bounced back up to around $250. And in future videos, I'll be going over my cost basis on all these stocks. But for now, FedEx is another big holding, and I truly believe in it for the long term. Cigna, this is, for me, a pure value play. A lot of people right now and analysts are bullish on the healthcare community as well as tech. Cigna, I believe, is one of the better healthcare providers out there. And I picked them up when their stock dropped when they bought Express Scripts. So I was looking at the company, and as soon as that deal got announced, I was reading about it, and I'm watching that stock drop and really digging into it. $67 billion really didn't seem like all that much to pay for Express Scripts, in my opinion. And honestly, the deal went through, as we saw with the proxy vote of shareholders, so that deal is going to be approved, and I believe Cigna will be another fantastic play in the rest of 2018 and throughout 2019. That'll be a stock I'm in, again, for the long term. So last one, and honestly my smallest position right now is Cirrus Logic. Cirrus Logic is my growth stock. It is a risky stock because 80% of their business comes from Apple. So if Apple ever decided to cut ties with Cirrus Logic, that stock would pretty much go to zero overnight. So I'm assuming a lot of risk with this position. However, they make audio codecs and kind of, all the Siri and the text messaging voice feature that's just becoming bigger and bigger, and you see a wide variety of devices today. And Cirrus Logic, I believe, is really poised to be at the forefront of this kind of revolution into more of an audio space. And one of the future Apple iPhones has planned to have voice biometrics. That's something Cirrus Logic is working on. Now, I've held them for well over a year. It was one of the first stocks I ever purchased, along with an unnamed company that I'll go into later. RIP my account. Cirrus Logic, it truly has one of the best Jason Rhodes, one of the best management teams, and that's a company that I'm going to stay bullish on. That will probably be my longest holding, probably around another 3 years I have at least on Cirrus Logic. So those are all the stocks I have in my first account. So taking a look at the second account, this second account is a Roth IRA account, so it's a tax-deferred retirement account that I believe I'm setting myself up for future success with this, and I believe you guys should open one as well. So I have two different accounts, the first one being just a standard investment account, and then this one being the tax-deferred one. This one is well over 5 times the size of the other one, and this one I have a much more priority status on this one, let's just say. So as you can see, I'm holding the averages, the iShares Core S&P 500 ETF, and that is a very big holding of mine, and that's by far the biggest one out of all the accounts. Because I believe, honestly, at the end of the day, a lot of money managers try to beat the averages, but you're not going to find one consistently year after year that beats the averages. And honestly, it's important to have some good exposure, I believe, all the way around, and I'm a big proponent of taking at least $5,000 to $10,000 and putting them in the averages first before you do anything else. Now, jumping into the next one, Facebook. Facebook is a company that I believe is, honestly, I did a video on this earlier, the easiest money you can make in the stock market. It's a company that's on a severe pullback into a bear market right now, and honestly, the stock crashed a little bit. It's like, I believe it's trading like $164, and it's a company that will forever grow at least for the next 5 years. It's been growing at a 30% clip, growing revenue. The ad space is only going to continue to get more expensive. The big companies are going to come in over the next 12 months or so and buy out all the little guys that you see, like the little drop shippers on Facebook or Instagram, and they're all going to be bid out by the Googles and kind of the NFL, all these big kind of corporations and companies, Apple, and they're going to be advertising on Facebook, and Facebook's ad revenue is going to go through the roof. Now, eBay is a smaller holding. And I've owned this one in the past, and I sold out of it up 20%, but I bought it again because the stock went back down, I believe, unfairly after an earnings release. And again, I try to buy a broken stock, not a broken company. I believe eBay is posed for some great success, probably through the mid-half of 2019 is when I'll be looking to hold this one. I have a 20% upside automatic sell on it, so when it breaks that 20%, it'll be sold immediately. I'm a little bit, I believe I'm below my cost basis a little bit, maybe by like $1 or so. But eBay, I believe, is a great company that you guys should look into, and I believe anything below like $34.50 is a great steal for that company. And then finally, a pretty big position that I've built recently, Facebook, eBay, and Constellation have all been kind of more recent positions, maybe like a month or so. Constellation has performed very well, and I got into it because it's a great dividend company, and it's really a play on cannabis over the next 5 years or so. They have Canopy Growth, they have a major stake in that. And kind of selling cannabis beverages, I believe, will be huge for that company's growth and profitability in the future. It has a great management team. I will continue on any pullback of that stock to buy more. And I'm pretty happy with the position I have now because it's pretty big compared to the other ones. Facebook's very big as well. But all in all my positions are dwarfed by the S&P 500 ETF holding. And I truly believe that you guys should have some exposure to the indexes and play those because it's very easy to just put money in, forget about it, and watch it grow over time with the indexes, and there's a lot less homework. that you guys have to do with the S&P 500, and it kind of just helps you sleep easier at night. So those are all my positions, guys. Thank you.
Thank you guys. Let me know what you think of this video. Click the subscribe button right here. Throw me a like, throw me a comment. I want to hear, are you holding any of these stocks? Now are you thinking of buying these stocks based upon this video? Maybe I can give you guys some insight on what maybe to buy them for in the near term so you can maximize your profits in the future. Thank you guys, and I'll see you next time.